Now, very straightforward day. Wednesday is probably, the market was really kind today. Now you see, at the start of the day, we started selling in that green. Now, if you're a newer trader, you will tend to want to catch a trade, chase a trade, right? You feel that you're missing out. But as you get better, as you understand how to be planning your approach, you understand how to be preparing ahead, in a way, creating certain predictions of scenarios on your training and based on your skill level, you will understand that there is no need to chase, firstly, because the market gave you a very good clue here of the aggressive seller that's in the market participating today, in this case, the green algorithm, right? So you don't have to chase because you know this person exists and you see that seller appearing later to give you good money, right? So you see it's the same seller. When you can understand this, you don't chase. You prepare, you wait. If he appears again, you tag on to him or her or machine, whoever it is, right? This particular aggressive seller that's using this particular algorithmic trading in order to start selling. And yes, you see for yourself. So there's no need to chase this. So if you're a newer trader, yes, you are struggling. I implore you, just prepare ahead, wait for structure. And as I always say, no structure, no trade. Now there is a trade here early in the morning that I took. This one was because I saw some of the nuances in the candles and I saw a dual algorithm start forming. Now, at the start, my orange wasn't like that. My orange was slightly tilted, right? So something like that. So there were presence of two control algorithms here, right? But most importantly, magenta started showing. Once magenta started showing, I took a quite straightforward trade here. Now, I want you to understand a few things about this trade that I took. Basically, what happened was I took a put of that large red candle. So there are several factors that helped me with this trade, right? And you notice it's quite a similar pattern to this. Firstly, this was a large candle, right? So it touched the 5-day moving average, well, large relatively to the opening candles. So it's not really a large candle, but you get what I mean, right? So firstly, it touched close to the 5-day moving average. We identified magenta, so it was pretty tight back then. And this was enough for me to consider taking a trade because we have not traded above the 5-day. In fact, we rejected it with the engulfing. So I knew that there were sellers right here. Right, there were sellers trying to protect the range of the 5-day. I don't think we are heading back right up yet because I don't see any clear liquidity here, even if this heads up. Right, I have some leeway here, right, so I can still manage. So you understand that, firstly, I don't see any bullish liquidity. Secondly, I saw a clear resistance in the 5-day and the magenta, so I could, well, technically have a very, very tight stops. And once the selling started, right, so thirdly, I got lucky, isn't it? Because this candle immediately turned red. And once it turned red, it gave me a chance to see whether this green selling algorithm is being activated. And that was from the clue from earlier. So look at the number of conditions that is in my head before I take this trade, right? If this green precision algorithm hasn't shown up in the morning, I will most likely not take this trade. So understand this, right? Let's take a look at the trade, my trade timing here. Well, you can study this trade here, right? I think it's here, right? It's just a morning trade here. I'm not sure how much it turned out to, to the end. I think about 10 bucks here. Right, did I close it at 10? I'll check it later. It's not here, but I'll check it later. Understanding this, right? Very importantly. Wait, let me just check the price again. Why do I remember it closed at 10? 46. 46. Oh, I definitely closed more. Let me check my trade entries later. Yeah. So I remember closing it at the larger candle here, but I could be wrong. It could be the later trade here. But anyway, understanding the conditions required to take this trade, and when you know that, maybe, just maybe, you can practice your early candles and you can see this happening better. Now, we identified the blue, I think, a little later. I'm not sure, is it here? Let's take a look. When did I identify the blue? How much later, isn't it? 10:37. 10:37, a little bit later. So not here. This was just the green. Now, at this point, there was a wedge that started forming. I wanted to share this. Let's see. Was it here or was it later? I think it's much later. Okay, it's a later trade. There was an afterthought that I had. Now, back to this. Now, then you see magenta started building liquidity. Now you see penny perfect magenta, isn't it? Now, the only possibility of this going down would be here, right? I can see that happening here. And this is why you have to chart the green rhythm diligently. If this doesn't head down, no, it's not going down. So if you don't see the candles increasing in volume, look, it's decreasing. You don't see it increasing in intensity to start selling. This green does not want to sell this yet. So this is what I mentioned. If you don't see the candles trying to push its way, and trust me, if you spend enough screen time, you literally can see the strength of the candles. Now, on hindsight, the candles are static. You can't see them. But when the candles are moving, they are moving according to the volume, right? So you are able to, well, in a way, ascertain the strength of the candles when you are looking at them. So there is value in looking at the charts as the candles move. So when this doesn't want to push down, you can't take a trade here. So there are a few ways you can commit to this, right? So maybe you take a trade here, but you have to protect as soon as you can and cut it once it heads out of the green algorithm. Or secondly, you wait for the breakout and you see if it retraced off that magenta, and you will see this breakout and retrace very much later. See for yourself, you will see it later, so you understand how to be taking trade entries here. So I do admit this is a possible beautiful trade here, just in time for the magenta liquidity, but the green algorithm doesn't want to take it here. Why? Not enough orders, right? It has to build more liquidity in order to push down, which is fine, because the stronger liquidity you build, the larger the move will be. You see it for yourself. So I don't mind that. You have to know what you're planning ahead for. So at this point here, I can't go long too. And I told you about that. Why? Because this is just grinding up. You know it's controlled buying. Now, when you know it's controlled buying, you know who's controlling the buying. The sellers are controlling the buying to build liquidity for them to sell. I can't go long here. And so this is why I told you, wait for cups to close. Wait for 5-day retest. The 5 days, that's beautiful. So you can afford to wait for the 5-day retest. And I talked to you about closing the cup first before going long. And you see for yourself, because we had a few more bearish confirmation here. We rejected off the teal, right? We had the breakdown from this magenta, right? We started building a second magenta, and this head and shoulder pattern makes more sense now. So you see, we could still have a very beautiful trade here. However, the only problem about this trade, right? If you caught it early, that's great. So difficult to catch it early here, unless you caught it from the rejection of teal. Otherwise, I wouldn't have caught this trade. Not so easy for this, because it's not easy to manage your risks because it started selling in teal. So let's say you caught this trade, which is not a bad trade too, mind you. Teal, 5-day moving average resistance. You know magenta is controlling the selling, right? And by here, I think we already identified the blue. So you know that there is some form of tapering, right? In the dual algorithms, you notice magenta and then blue, that's dual algorithms here, right? So if you took from the head here, or you waited for the shoulder and you allowed the trade to be protected right at the bottom of teal, and thereafter we started selling less aggressively in the teal, you are still in the green because this is trending down. So you could still have taken quite good profits if you manage this trade here. So you understand, yes, you can still have taken a trade here. You must have protected by here. Why? Because this is the cup close, and I mentioned about the cup close. Right, so you could also still wait for the blue, or you protected it from the blue because we identified the blue here. Right, so you could have still also protected from the blue. It's still a beautiful trade because you gave yourself some profits to wait for the larger trade later. Now let's take a look at the larger trade. This one is quite straightforward. This one is easy because the market was truly very kind. Yeah, we closed the cup, you saw it happening, and you saw magenta building liquidity, right? Magenta rejected at the top, and this is where you get ready for the breakout here. Now you see how beautiful it is, not just the breakout from this, not just the breakout from this, but do you see the retrace? I want you to see it for yourself. Yeah, the blue is just absolutely beautiful, right? So cup close, handle formed, and once we broke out, it establishes that the green is in control. So this green support here bounced back up here, and we rejected off that blue again. This is the breakout and retrace here. Now breakout, retrace, and break down again. Now, if you want to chase a trade, you wait for this engulfing and you chart the green algorithm here. Now, this may not be that easy because you see there are variances in this. So once you see the red engulfing candle, you get ready for a trade. And you know that you can take a trade once you establish a selling algorithm here. Now, in this case, there was another selling algorithm here. If you were to chart diligently, not truly the green, just slightly stronger than teal, you can use that as your risk management, but I would prefer the green. I'll wait for the green to turn up, and I started shorting here. Let's take a look at the time that I shorted this. Maybe you have a better understanding here. 11:02. This one 11:43. 11:43. Yeah, that's right. Yeah, right. So understand this. Firstly, from my 11:02 trade here, 11:02. I've already taken some profits here, right? Remember I told you about this trade here, break off that, magenta, and after which taking more profits because you don't see any selling. And thereafter, once you saw the retrace, that's my confirmation. But I have very little place to place my stops, so I wait. I saw the red engulfing, I know the seller is active, right? And I have to wait for some sort of major selling here. And I took it at 11, let's see again. 11:43. Where exactly is it? 43. Here, this candle here. Now, this is important information here too. So at this point here, till this point, can you understand firstly the cup and handle? That's the most important basic, right? So you could have taken it many areas. You could have taken it on the break of magenta, right? You could have taken a trade here. This was still a beautiful green protected by then. You see it, right? And then it started retracing back to blue, right? Once it retraced back to blue, the green selling wasn't that clear. So this was quite dangerous here because you noticed the pink was in control at this range. This is great news for me too, right? Because you know that there is a wedge that's forming. Take a look at the wedge. If this support breaks, why was there such a large candle on the break of this pink? That's because you're triggering order stops. There are lots of stop loss orders here, and once you trigger it, the seller can sell more efficiently because it has orders that to be filled. These stop loss are orders for the seller to fill in order for this to head down. So all these are just stop losses, and thereafter aggressive selling. So you understand this logic of breaking support ranges. Now I want to show you this wedge here. Now wedges are very important. I will talk about them in another video, but you have to look at volume in wedges very importantly. Well, let's talk about them now. Now in this case, you saw that the volume has not changed. It's the same volume, and this is trying to tell you that the sellers are pushing it down. Now if this volume has decreased over time, this will head up. Now you have to understand that. Now keep this in check. I will talk more about that in another training video. But quite simply, you just have to understand this. Yeah, if this volume heads down, there's a wedge. This will head up, and the volume is the same or even increasing, then this means that the seller is in control. It will head down. And in this case, you see that happening here. So that was also in my mind when I took this trade here. Understanding, firstly, the confirmations, right? I have a cup on handle confirmation. I had some continuation structure. I had a retrace to the blue algorithm. I had a red engulfing candle. And now I'm waiting for the green to show. Waiting for the green to show, that's very important. But yet there was this pink and this teal right there. I saw that the volume was not decreasing, and that means the sellers were still intensive, and I'm just waiting for the green, and it started pushing down. Right, so several conditions, confirmations you need to be looking out for and assessing. Now, it's not easy to assess that many information, isn't it? And this is why I always encourage you, protect it early. Look, I protected early. 43, 46, I protected it as soon as I can when it's still in the wedge. 46, I think it was here. Right. Once this large candle appeared, I protected it. So you understand about protecting a trade early so that you can start assessing. And once this started forming, I'm able to chart the green algorithm and it went all the way down. Right. There's no need to cut your runners. I only cut here once that large green candle started forming. Right. So this was a pretty good trade all the way down here. Only cut it once it started bouncing back slightly. Right, but you see the green algorithm was still in control here. Right, the problem with that is that I'm too deep in the money. I will explain that more next time. But a 1 point bounce here, almost half a point bounce, just doesn't do well for something that's deep in the money. I will talk about that more next time, right? So all these, there is certain basic information you need to understand to come up with all these trading decisions. Now, after which, you notice that we started having, once again, the blue. Right, I stopped trading here. But you can see it's still the same controlled buying. So you know that the bulls are still, well, the bears are still in control here. Now, there's another trade here you could have taken, right, which is a starter position here, you see. Now, we saw the liquidity in this building here. So you know that once it broke out, you saw orange buying, so you know orange is the buy you want to look out for. And you see it buying here again. And we stopped. We built more liquidity. I would have taken the call here, right? Because you understand that this is a nested right shoulder and grabbing more liquidity here. Now, remember, I always talked about you charting this more diligently. I would charted this here. You would have seen it very clearly here. Right shoulder nested right here. So you could have still taken a beautiful trade off this orange, right? It didn't fully materialize, but this is still a good, how many points is this? A good 1 point trade. This is 1 point. Unbelievable. Especially late in the day, 1 p.m., 1 point trade is very valuable here. So absolutely beautiful trade here if you took a trade, right? If you understood this. Thereafter, we lack continuation. You see that the pink was rejected twice. And you see, once again, we were wedging. Right, we were wedging here with the pink and magenta. You would have also noticed a dual algorithm. So once again, charting this diligently, you will be able to chart the blue. You know that the blue and magenta, there was this dual algorithm here. You could have taken the short here. Right, once again, in that green, selling algorithm, isn't it? So taking the short here is still possible if you're just trying to scrape for micro trades in a chop. You still can find good profits. Trust me, I believe this at 2 p.m. This particular trade here on the break of magenta could still be 100% trade if you got this right. It's a 2 p.m. trade nearing end of day, and it's almost 1 point. So you have to understand, well, it's more than 1 point, I think. Yeah, it's more than 1 point if you caught it from the top. So this is definitely 100% trade if you caught it. Now, thereafter, what's more important is the blue algorithm here, right? So we did break the blue. We started rebuilding. This is a beautiful structure here. But the only problem with this was that the selling was in teal, not in green. We were in green slightly, so you have to take profits then. And once it bounced back up, you have to cancel this trade. So understanding the blue started building liquidity, but the market said not yet, right? Because there are people that's covering here with the blue algorithm. So yes, there's still a trade here, probably not 100% trade, right? But maybe a 50% trade here, it's still possible. You still can find profits in the charts, especially when this is part of the selling continuation that started from the break of magenta and the dual algorithms here. Now learn to see how to see microstructure and find profits in the charts, even if it appears small. Not true, not always small. There's always good profits here. And thereafter we started chopping into this blue again. And if you wanted to call for the reversal, you have to understand this, how to be looking out for context. Because firstly, we had, well, an attempt to head up and we got rejected here. So you need to understand who's building liquidity. In this case, pink is building liquidity. So you cannot go long until we break out of pink. And in the same way, you cannot go short until we break out of the blue. And so this just means that by 2 p.m., we lacked continuation on both ends. And you can see that very evidently from the liquidity wedge. And once again, penny perfect, isn't it? You knew that there was going to wedge all the way to 4 p.m. right there. Or because you understood there was a lack of continuation up from the pink, lack of continuation down from the blue. Quite straightforward. So by here, once we started blocking the support and not being able to head down, this is when you have to call it a day. Market try to head up, try to head down, no continuation. It's probably going to be a stalemate till the end. So understanding how to be looking out for structure, understanding the context, understanding how to be looking out for confirmation. Now, I will obviously teach you more in terms of all the technical interpretations here, like the wedge that I was mentioning with the volume, using volume to understand that. I will teach you more about all these technicals, but in separate videos. I want to keep this in terms of analyzing instead of theory videos. Theory videos and another set of course instructions. But yes, quite straightforward day for Wednesday. It's quite straightforward right at the beginning of the day. Now, as always, you see the precision algorithms showing themselves. Now, that's absolutely, as I mentioned, absolutely no need to be chasing this. Instead, learn to identify the precision algorithms that will come in handy later. Now, you will realize this green and blue precision algorithm that will come in really handy later once we broke the magenta. See the blue, which is absolutely beautiful, and that showed itself right at the start of the day. So if you're a newer trader or you're always chasing trades, learn to identify this particular precision algorithm, and which you can apply much later too. Now, in the same way here, you notice that there was slowdown in that selling. So you have to wait for some sort of liquidity to start building here. Now, one of the key algorithms here for the bears was this orange algorithm here, right? You saw the orange building liquidity. And it's quite a beautiful head and shoulder pattern of that engulfing red candle here. Now, the only problem here was that there was no continuation. You see, once we charted the blue, right, there was no clear breakout here. Now, I could have identified the magenta earlier. I'm quite sure I didn't make it in time. Let's see, this is 9:58. I'm quite sure I didn't do that. Nope, not at all. So one of the problem here was not identifying the magenta in time. But that's fine, because even if I didn't identify the magenta in time, you see, once it started breaking out from that blue, you have to cut your shorts. You understand that it's no longer in the strongest selling. The strongest was actually green, right? But in blue, you have to cut it. You cannot assume, right? It will go down like that. Even if it does, it will stay in the blue. But yet, this was when we identified the magenta. This gave us the magenta. And so if you learn to cut your losses here, especially if you're looking out for that head and shoulder pattern here, and it didn't materialize, you saw the magenta coming into play here, then you have to learn to cut. And this became a very important clue for later, because you would see for yourself how beautiful that magenta was, right? Now, Thereafter, you waited and see. We were looking out for that teal, right? You saw teal already in effect here. And you saw how we grabbed the liquidity up here on that bounce. Now, this was the first time, one of the first times in the past 2 days that we retested the 20-day moving average. Right here. One of the first. Right, so it's been a while. I've always talked about this, right? The 20-day is always retested on an average about once a month. There are times that it took a little longer. Now, this was as close as it gets for the month. But thereabouts once a month, right, on average. Sometimes a little bit more. If it's a bearish market, obviously it will test the other way, as you can see. 20-day turn into some sort of resistance. And this is why you see such strong buying, right? Because there are buyers within this range here. That's just buying up as long as we hit the 20-day moving average. You will see that same phenomenon later here. Now, this is important. I will talk about that. And this is where you have to see the teal algorithm that was building liquidity here. Right, I was talking about this teal algorithm here. And that's quite important. Right, so you saw the teal building liquidity, and you saw the beautiful breakup here. Right, now at this time, at this point here, we closed the cup. You're waiting for some sort of structure. I caught my calls here. Right, this was my red trade here. 210, I got it. The calls here. So even if you missed this, you could have just caught the calls here as well. And thereafter, 210 here. And this was at 350. I didn't protect this trade, but I want you to see it's just a very small range, a 1 point range here. And it almost doubled, right? 350 from 210. Now, granted, I got it at the red candle, so it was a pretty good fill for me. And at that time, right, I saw how this blue algorithm, it was like that then. And you see how beautifully that blue algorithm was that I measured my trade against. And you see the teal as well against here. So this was my stop target if it went back against the teal. 210 here, I could have protected it at 350. This was a day that I was emotionally not in good shape to trade, so I didn't protect this. In fact, my mind was a little lazy. I was just hoping it will continue heading up. So you see, hope trading is not the way. And you see me closing this trade at the end. I talked about this in the Discord server. Now, I don't always have red trades. I do have them more often than you think. Some of you don't see them often because you don't study my trades, but more often than you'd think. But there are times where I truly have mistakes that are, ridiculous mistakes. So you have to learn from my ridiculous mistakes here. And in this case, I closed it only at 231. Right, and I explained why I closed it here when it's on the way up. Are you able to do that? Are you able to close a trade when it's supposed to go in your direction? You have to be mentally able to discern. And I'll explain this later, but I just want you to see. It was 210 here. It was 350 here. I didn't protect it. And throughout this entire range, I didn't stop it at all because I just lost focus and I decided to myself, it's all or nothing. Now, if you come across this mentality, all or nothing, in your trading, now you are in trouble. You're mentally not sharp enough to be trading that day. So you have to learn to walk away or just call it a day, because this is a sign that you lacked focus. I completely lacked focus that day. Right, so I just left it and I thought, hey, it's all or nothing, right? So even at this point, right, you have to have the discipline to cut it. And the minute I cut my trade here, I'm able to be much more focused. I'll talk about this later. But on the structural end, right, you see that once again, stronger green, tapering to blue, and we taper to that orange, and finally taper to that magenta, you see that the bulls are lacking in strength. And so you would expect some sort of, pullback. But in the pullback, you see the teal still building liquidity. And this is where you notice that the bulls were trying to build that head and shoulder pattern. Now, there are a few trades you could have taken here. The first trade was obviously, if you saw this break of magenta, you could have taken the trade, little retrace, right? But it started building more liquidity for the way up here. Now, we thereafter broke out of that teal without continuation. So you see this entire range here was a structure that lacked continuation. When you can understand the concepts like that, lack of continuation, you know when to stop trading and not overtrade here. So technically speaking, right, what's the ideal situation here? When you see this happening, right, you would expect this to break out from here. But if it didn't, then you don't force it, right? You don't force your will or your hope upon the market. If the market tells you teal needs to build more liquidity, and I just want you to see for yourself, it's penny perfect. There's no excuse. If you're hoping or if you're just trying to dream of a trade and it doesn't happen, you are in deep trouble. But however, if you are able to trade a structured demand based on how penny perfect the algorithms are, you will still make money. You will still cut your loss. So it's important you stay absolutely focused. Now, in this case here, it's quite straightforward, right? Because we were tapering here in that magenta, right? And you see magenta tapering at the top range. And you see where the volume came in once we broke out of that teal. So breaking out of that teal, support turn into resistance. You see the teal support turn into resistance. So it triggered all the stops of the bulls were here and therefore giving us stronger volume, and the break of that magenta support that turned to be that liquidity from that head and shoulder pattern that I was asking you to look for. So quite importantly, you have to understand, if I were you, if I were trading this, I would not short right here, right? I would wait for the retest of this liquidity. And this is why I mentioned about only shorting once you see the magenta being tested here, right? I mentioned this at 10:30. I mentioned that if we do not have some sort of structure in this magenta band, you do not short this, right? So understanding this, you understand how the market was trying to grab liquidity on the taper. Now, when you understand this, yes, you can catch this possible trade here, especially once we broke out. And just take a look how beautifully that magenta broke out and retraced beautifully off that magenta and that teal. So this is why even if you identified magenta late, that's absolutely fine. It will come in absolutely handy later for you to manage your risks. So look, it's penny perfect. You can manage your risks to the penny. That's very crucial, because that, if you watch the couple of first episodes of the trading videos, it will completely change your risk to rewards. When you have pennies for your risks, your rewards will be exponential. So it's very important. You have to remember that. So if you caught this trade here, once again, understanding the blue algorithm, right? Because this was identified earlier, managing your risk to the penny, and imagine if you held your runners all the way to the end because you had that blue algorithm guiding you, and obviously understanding the magenta on that retrace right there. Now, you saw teal building liquidity here, right? This was obvious. So you know that the bulls will have, or I wouldn't say will have, they will have that possibility of grabbing this liquidity on the way up. And you see it later here as well, right? So I mentioned about how the 20-day moving average can be some sort of beautiful structure here on the bounce, that inverse head and shoulder pattern. You see that blue liquidity here, isn't it? So you understand the teal, how it can grab the liquidity, and this trade here, right? Okay, this trade was absolutely beautiful. I will explain this trade. It's very important. Okay, so at this point here, I was red, down $4,000, right? And I declared it in the group. naysayers who say that I don't declare my rate trades. There it is, right? I even showed you way before it happened here, right? I was resigned to be a red day for the day. That's fine, right? So I'm not sure why there are criticisms in that way, but regardless. In fact, this is not the first time. There are several days that I tell you that I have a rate trade and I'm just one more rate trade away from stopping my day, because if you read the morning messages, I always mention if you have rules, your rules will include that the fact that if you have 2 rate trades consecutively, you stop your day. That's a rule you have to follow. So anyway, right, this is a red trade here. And we close the cup. Now, when we close the cup, what are you looking for? You're looking for a handle if you're a bear, right? And if you're a bull, this could be the head of the inverse head and shoulder pattern of this teal algorithm. So there is absolutely perfect reason or confirmation for you to take a zombie trade, because the bulls will want this up. Obviously, the bulls want this up, especially off a strong support. And the bears also need this up if it wants to form a handle down. And so this is known as a zombie, a zone of mutual interest. Both bears and bulls may have that same tendency to want this to travel in the same direction. And this is why I got calls here. Now, let me explain my calls. Now, firstly, you have to understand where my calls are at. Here. Right? I got 66.15 here. Now, 66.15 or 66.15 in the SPX is exactly where this liquidity level is. And it was 30 cents here. Okay? If I was not wrong, this was even less than 0.01 delta, probably 0.05 delta. When you can understand how small this delta is, right? This is not even a 10%, probably a 1% chance or even less than that. So the market's pricing in that this is a 1% chance this will get in the money. You understand that. And this is why it's so cheap at 30 cents. Now, understanding your delta is important because delta goes both ways. And this helps me in my stop because I caught this before the precision algorithm broke. Now, if you were to catch this, if you were to call for the reversal in this precision algorithm, it's a bad idea if you don't know what you're doing, right? So if I were you, I would get calls once we break out of that blue. Now, that's better for you, especially if you're a newer trader. But I want you to know I got my calls, I think, on this candle here. Let me just double check. Yeah, this one, this particular candle here, I got it at 30 cents. Now, by the time we got to the bottom, the absolute bottom, this was still priced at 30 cents because the delta was too low to make any significant change. Now, you must understand delta, right? You can check this out, Google it or chat GPT it, whatever. You will understand that this delta, the price of the contract is based on this delta multiplying by the change in the stock price. And so because the delta is so low, this is completely negligible. So whether I got it at the bottom or whether I got it at where I got it, right, still within the precision algorithm, it's still priced low. If I were to get it here, if I'm not wrong, this was 45 cents, right? It started to bounce up. It started to go up, 45 cents here. And I got a strike here, which is a realistic strike. Why? Because this strike was where the liquidity for the bulls are. So there is a tendency, a possibility that it will capture this trade here. If I'm not wrong, by this time, this was already at 70 cents. I didn't cut my trade. Why? Because firstly, I was red. So obviously, I'm taking more risks. But secondly, the most important reason was because I had the precision algorithm to guide me. Absolutely no reason to cut your trade, isn't it? So you see, When I'm more focused, and sometimes it's like that, right? When I had a first rate trade, my next trade will tend to be more aggressive and I make more money that way. That's not ideal, but that's how we are pushed. We are pushed when we are given some pressure. So, yeah. Anyway, when did I protect the trade? 226. That was about here, right? And so I protected the trade when I saw that there is some slowdown. It's no longer strong in the blue. And once I protected this, right, 130 compared to 30 cents here, I've protected it sufficiently. It's way more than covered, right? This is 4 times. I've come 400 4 times. I've already protected 4 times over. So I'm fine with this. And I saw that the teal was building liquidity here. I could keep my runners. And therefore, this is why you see me holding the runners all the way. And this was already covered. Remember, I already protected and covered the trade. And I kept it all the way to 241 at $3. So 241 was here, right near the top. And once I got to $3, I closed the trade because I thought this was as good as it gets. A 10x trade right there. And this was near to my strike price. Isn't it? You understand? Understanding the liquidity. So choose your strikes, well, in a way based on where you think the possibility of it is going. Now, if you were to choose a strike here at the 5-day moving average, this is a little unrealistic because firstly, you have the high of day. So there will be sellers here at this range, including all your liquidity from the bears, from the bulls here, blocking your way. And so this is why you see me cutting my, this was my previous red trade here, right? 66.40, which is here. 66.40 is here. Near to 5-day moving average. That's what I remember. And so, even though it was going up, right? Even though it's going up, I cut those calls because I knew that this is going to expire worthless anyway, right? So I got out even though I could have that mentality and said that it's just $10. Let's just keep that. You never know. Maybe you'll head back up. You can't have that sort of lotto mentality. I can always recover it later. So I made a bad trade here. Completely lost focus. But you see, instead of keeping that trade open, I regained my focus and I could still trade properly. So you have to learn to trade properly, learn to trade with the right discipline, the right systems, and don't allow that mindlessness to get to you. And so we're understanding Zombie, understanding the 20-day moving average, a strong support, understanding the liquidity here. And you see that teal algorithm turn out to be absolutely beautiful, isn't it? Because look, right? The bulls were always trying to build liquidity. I think I sold some calls here. I'm sorry. I think I sold some puts over here before Friday. Yeah, I will show it to you in the Discord server. So yeah, still made more money on the way up. And this is instead of swinging, and this is something I will teach you in future. Instead of swinging an option by buying them, because overnight options, you will get decayed quite badly too. Instead of doing that, right, a lower risk way of doing that is to sell put. So in this case, I sold a put, right, and it helped me capture the move up anyway. And even if it's not captured tomorrow, I can always roll it. Now, when you're writing options or selling options, you are in control because time is on your side. But when you're buying options, time is against you. You are fighting against time. So understand that. And so if you want to swing, you write options, you sell options because time is on your side. You understand that better. You will have better trading finesse. The reason people don't sell or write options is because they don't have the capital. So the big goal for you as a trader is to build as much capital as you can. And that's why I'm telling you to accumulate wealth. And when you do that, you can start trading like the big boys, but obviously in a smaller scale, but you make money like a big boy or big girl, big lady. You get my point. Okay, so understanding Thursday was really important, right? Thursday is probably one of the better days that you can learn from my mistakes, and particularly some advanced trades, because I was under pressure. Yeah, I made it back anyway. I could have made more, but that's the thing about the psychological setback you have when you have a red trade, right? I could take more risks. Now, usually I would have taken, like if I were green here, let's say my first trade was green, right? I would have easily taken 100 to 200 contracts here, especially off the 20-day moving average. But instead, I settled at 59. Why 59 to say? Because, well, I wanted 60. I'm not wrong. One wasn't filled. Something like that, right? I don't always get my trades filled. And yeah, I could have made more money, isn't it, if not for this red trade. So you understand the psychology behind. You put yourself in a poorer position for your future trading decisions. So this is why you treat this as one game, right? This is one set, one game. If you don't start right, it's very difficult for you to follow up on the next trading decision you make, or the next play to chain up together, because everything affects each other. Right? As much as we say each trade is independent of each other, well, we're humans. So you have to understand the psychology, and this is why, if you can, every trade, same system, same metrics, everything you keep it consistent, everything you keep it in some way measurable with the same denominator. And when you do that, right, you can be very consistent in chaining up your plays like that. So this could have been a payday for me here, this 20-day moving average. And you see, the thing is, we only test it once a month, so this could have been an absolute payday for me. But what happened? I only made 10,000, and less my loss. It's not even worth it, right? So you understand the problem behind chaining plays and the psychology behind trading decisions. But it's better than, I'm still grateful, please don't be mistaken, because I lost focus at the start. I'm saying all these only on review, on hindsight, but on that day I was just happy to be out. Yep, it's like that. So you have to be honest with yourself. You must have that sort of clarity in your mind, in your spirit, in your heart, and be able to, well, trade according to that understanding of who you are on that day, right? So some of you trade with baggages, or trade with the lack of clarity, lack of, if you don't mind me using that word, purity, then you could get into trouble, because if you get greedy, or if you have some unclean thoughts, you will get yourself in trouble. This is what I mean by systemizing, right? Being good discipline, being good order. And you will notice your trading will just keep improving, because you are building a strong foundation step by step by step by step, right? And you will only get better and get stronger. For some foundations, once you build a good enough foundation, especially near the bottom, this is unshakable. So even though you can have the top of your pyramid crumbling, the bottom is still rock solid, and you can rebuild on it. So learn to build the foundation strong, right? So once the foundation is strong, no matter how much you retry, there is a base level. And this is why there are checkpoints along the way, right? So you can build upon that checkpoint that you last consolidated and your foundations on, right? So Thursday was a great learning day. I hope you learned something from this. Forward, let's take a look. Now, at the start of the day, we had strong green candles again. Just like previously, a lot of retail traders would try to chase this, isn't it? As I mentioned, you don't try to chase this. You will get yourself in very deep trouble, especially start of the day. Unless, of course, you manage to find very strong risk management algorithm to help you manage your risks. But in this case, what helped was that we identified this green buying, which you would see it, right? This came in useful later. So yes, we identified that, and we were looking out for some of the controlled algorithms to understand the bulls building liquidity. Now, at this point here, quite early in the day, we identified some teal algorithm here, right? So now, importantly, you don't see very clear structure, right? I wasn't able to pin a trade with the teal because I can't tell that the bulls were trying to build liquidity. So I'm absolutely all right to miss any longs here. So you understand my thought process. But however, if you were very anxious or you were having some fear of missing out, now this would end up terribly for you. And in your mind, you have to start to convince yourself a few things here. Because firstly, 5-day moving average is so near, just 1 point away. So even if you had a big break here, right, which we slightly did, but this was unstructured, you see that, right? But I will show you another structure from this. You would have very limited rewards. So I didn't see the teal, and as I always tell you, if you don't see any structure, there is no trade. And you have to trust yourself, because what truly was controlling the algorithms here was magenta. Can you see that? See all the top wicks here. So magenta was controlling the liquidity at this range. So no need to go long. As I told you, if you want to go long, see my instruction here. Wait for some tapering. I was expecting some tapering before that teal will start forming. So here's a structure for going long, right? When you saw this, and once we retested the 5-day moving average, if we do start to form some liquidity here, right? And we grabbed it here, right? So if the bulls decided to buy in here and we grabbed the liquidity of 5-day, this would be beautiful. Can you visualize it? So a big part of putting in your trades is to visualize how your next trade setup will look like. So in this case, you don't feel like you're missing out. So if this happens, I would have confirmation, plenty of it. So didn't happen here, no trade. However, as I mentioned, you will see, this magenta in control at this range together with the orange. Look, absolutely beautiful. And the clues were at the start of the day. So this was what I told you. Hey, that's the starter position here. Let's see. Yeah. If that's a starter position here, and this was at 9:43, isn't it? Especially off the rejection of that 5-day. You could see absolutely beautiful. And we were very, very lucky because the market was extremely kind to us with that green selling precision algorithm right there. Now, I want to talk about my trade entry here. Now, you have to sometimes be a little bit more aggressive if you want to be, well, challenging yourself. But of course, if you're a newer trader, you have to get the basics right before you fine-tune your finesse. So to me, large green candle here. Okay, you saw that. I was just reviewing through some of the trades here. Some that's not red, but there was one with, I thought it was pretty good. This one, right? So do read up this. If you have time to review other people's trades, you will learn so much more than from me, sometimes. So please do that. Now, there was a lack of buying continuation, right? Because firstly, I'm not sure that teal was building liquidity. I can't be too sure. I don't see the teal liquidity, right? We were in that orange. Magenta was there, and we slightly built up in green, lack of continuation. I took a put here right at that green candle, perfect fill, as well as knowing that 5-day moving average, I have that as my stop loss target. I have the magenta and the orange here as my stop loss target. So I have plenty of confirmation to stop my trade if it's not working out, knowing that if there's a rejection, I'm going to get full value in this. Right, so this was an absolutely beautiful trade for me. 250%, 5-figure within 10 o'clock, done for the day, early. So as you get better, you do realize you can finesse the skill to find profits in the charts every single day. You don't have to always go for maximum profits. Sometimes you feel like working only for half an hour. You find that possibility to just take a little bit profits from that half an hour. But I would encourage you to do this as much as you can. Spend as much time as you can with the charts. Be as disciplined as you can. Be as systemized as you can. Because if you treat this seriously, well, the market will reward you if you respect it enough. So put in the effort, and yeah, you see the possibilities of that. So this trade, absolutely beautiful. And only, well, there are some lucky factors here. Firstly, broke off that orange, right? Secondly, the green started showing. We had this green right at the start here, right? This one, we identified it right here. So it was helpful for us to start charting that green. And we had the first red candle. I protected it by there. You see how I be so aggressive in protecting my trades. Yeah, you have to do that, isn't it? Right, so protected it by 10:03. By the time we got to this large candle, I've already protected it. Why? Because we were at the bottom of that green, right? So protect the trade. I am completely stress-free. I am stress-free by then, right? So this green started appearing, so it helped in managing the runners. I cut my runners here, but you can choose not to, because firstly, well, we didn't even retest a previous high, and it continued going down in that green. So this was a clear selling continuation structure, right? Because we closed the cup as well. So beautiful trade here, understanding how to be managing your risks, knowing how to be looking out for, once again, the dual algorithms here. Now, there is another trick to this. I will take a look at the 30-minute chart. We were here, where the 5-day moving averages, and the magenta algorithm here. Do you see the resistance of that 5-day, of that magenta, right? And we lacked buying continuation in the 1 minute. This is not good enough bullish liquidity to try to push us out of that magenta and 5-day. We know there's a right shoulder here, yes, but it's not enough liquidity. So a short is in order. Does it always work? No, you manage your risks. Even if it doesn't work, you may even come out green. So you understand the logic behind this. It's not about trying to catch the direction. Obviously, it helps, right? The direction only matters after which when the precision algorithm appears. And by then, you are already in position. So this is just like playing any sport. As long as you're in position, it's so much easier to catch the play. Whether it's football or tennis or whatever sport you're playing, positioning is in fact more important than having that individual skill. So if you're able to have some sort of positioning here in place, the precision algorithm will bring you home. Then the direction matters. So manage your risks, get into position. That's what you need to be learning to do. Thereafter, cups closed, right? This got straightforward. I talked about having the cup close. Now, once you waited for the cups to close, it became really easy here. Well, of course, you don't wait for the 20-day. I will talk a little bit about that, right? You wait for cups to close here. And you see the cups closing here, right? Cups close. Wait for a structure to start forming. You see, once again, the dual algorithms here, right? Especially off that break. And there you go. Absolutely beautiful trade all the way down. And I told you to protect more because this was the gap. I closed the gap, take more profits, right? It's expected because there will be some sort of defense from yesterday's close. You have to understand some basic levels. Yesterday's high, yesterday's low, yesterday's open, yesterday's close. These are all key levels where there may be a saturation of unfilled orders that were just placed there. So these are the basics. You have to understand that. I will cover all this basics in future with the proper, more structured lessons. But yeah, thereabout. Now, then we were looking out for that pink algorithm. Just take a look how beautiful the pink was. Penny perfect, right? Especially here. Right, so you look out for some sort of continuation structure. Now, in this case, the head and shoulder pattern isn't clear at all. Right, there's one on the break of blue. Right, if we were looking out for this would have been a beautiful trade because we broke back into that teal as well. And this one, as I was mentioning, you had some precision in that orange. So this would have been a great zombie trade. You have to treat this as a zombie trade because thereafter we did start trying to build more liquidity down, but didn't build so. Now by here, once we started bouncing off that pink, take a look. If without this pink, imagine if you didn't have this pink algorithm, you would have been very, very screwed. So understand this. Once you understand this, you know how to protect your trade. Now, would I have taken this trade here? I would have waited for cups to close. Or by then, I think I would have identified another algorithm here. That magenta is not strong enough. Because once we close this, I saw another algorithm here. That I saw the control, right? And you saw it happen. By then, you have to identify. So if you're around, you have to chart diligently, look out for more structure, especially if it doesn't start heading down. So this is quite important. Now pay attention to this blue. It will be important, right, for clues for tomorrow or for Monday. But imagine if you didn't have this pink algorithm here, right? This would be disastrous for you if you wanted to take the short, because this looks pretty good, especially on the first break here. But otherwise, you would have plenty of opportunities to protect your trade, isn't it? So remember, as I told you, you get into position. You don't hope that this is heading down. You get into position, you protect your trades, and you look out and assess for your selling position. If it heads down, it's an absolute bonus for you. So when you can apply this concept of getting into position instead of just being so fixated on directional trading, you will perform so much better. That being said, some very beautiful trades here, isn't it? Because it's a combination of the teal. You saw the teal building liquidity here, right? But I personally wouldn't have taken a trade maybe here, right? Once we broke out here. So you saw the nested structure, right? It's trying to do a nested right shoulder here. Maybe off that teal, I could have some very tight stop loss with the teal. Maybe I would have taken that, especially once we have failed selling continuation and identify that blue algorithm, right? My risk will be here, and I may be trying to take for the cup close here. A better trade here would be a cup close off that pink, right? You would expect that, and you see how the market was building liquidity with that handle. Do you see that? Cup close, handle. It's beautiful. So understanding this, and then when you know when to take a trade, probably here or probably on the break, that's absolutely fine. Because by here, once it started pushing out, you would see that the orange and the green were already in control for that precision. So charting out the precision algorithm, you would have possibly be able to catch the momentum of this trade here as you see the volume increase. Absolutely beautiful, right? As we retest, by then you would have protected by the pink, and we lack that buying control. We lack the buying precision up. And the next structure you had to wait here was the cup close at 5-day before we started building more structure. But we ran out of runway, right? Everyone's off for the weekends, and you see that happening on Friday. Just want to kill you off, right? This is brutal, right? This is probably just a 1 point range. 1 point range means only 2 strikes are in the money. Yeah, right. Just expiring everyone out. Brutal. This is brutal, right? And this is for the final 3 hours. Very brutal here. So you just have to be very careful, right? This is what I talked about how Friday was brutal. Yeah, right here. The chop can be very brutal. I talked about that even early in the morning. So you have to understand this on Fridays. It happens. This is very normal, especially when you see there's a safety play here. So otherwise, it's quite a straightforward day here. So understanding getting into position here, right? Understanding continuation structure. Remember, as I taught you last week, context, structure, and continuation. There you go.